Hello everyone, Impulse here. Today I wanted to go over my trading strategy and how I approach trading in general and which indicators I use. I have a fairly simple trading strategy. I just trade support and resistance while also using supply and demand on higher time frames. And I just use the EMA 200 as an extra confluence in terms of trend trading. So without further ado, I have like two examples here in terms of demand zones on Sol and one in terms of supply zone. So here on the 3 daily, if we look at Sol, I've marked this demand area, um, which didn't get retested up until like the bear market in 2022. But as you can see, once it retested this big order block or support slash demand zone, it had like a massive bounce of 50%. And you can see like, well, 48, but in any case, you can see that these demand blocks work really well if you use them on higher time frames. It also shows that here on the supply side, once it tapped into it, it fully rejected as we were in a full bear as well, of course, so that you can also take that into account when trading, like what's the trend like, what should I do here? It immediately rejected and it never retested and never came back. In the case of the demand zone here, it did retest a couple times and then like bounced for a 100% move, I believe. Yeah, that's a 100% move, more or less. And here as well on the demand side of things for Sol, for those of you that were around during our May crash, you remember how destructive that nuke was, but also the bounce that followed afterwards. If you just place limits in like very deep pockets of liquidity, like these order blocks, you got massive bounces out of it of like 50% in a couple minutes on that day as well, of course, because it was a huge lick run. Um, but that's something to always keep in mind when trading like higher time frames, like the 3 daily. These demand zones can be very beneficial to your trading, and you can pretty much build a trade setup around it if you're looking for deeper entries once the market is overheated and is going to pull back. Now, if we jump back towards last month, well, earlier this month, we had a similar thing happening, but more so on the weekly time frame. We had this big support level here. We had this big support level here, support area, more like it, around 112, which you can see if you go back to previous bull market history. There's a nice little support area here. And if you place some limits in this zone, once again, this is actually also a demand zone. If you take this order block, it bounced into this area and it immediately moved upwards of like 20%, and then it continued to pump onwards on the weekly time frame. On the daily as well, it took some time to recover, as you can see here, and then it reclaimed the trend for the trend indicator that I have here, and it continued going upwards. Um, that's it for Sol. Like these supply and demand areas are usually super easy to indicate. We have one here on Sol right now on the daily that if we were to pull back, you probably want to bid 150 to 140 um, for a good bounce if it goes back, and it seems to be topping here again momentum wise. If you look at the RSI, we can see like it could retest the 50 here, which is good. This will indicate that we can long here once it hits the 50, and that's what you want to wait for here. I don't use the RSI too much, but it's always a nice confluence to have if you're using it. As for BTC, you can also identify these liquidity pockets and supply and demand zones. For example, we have one here, which could also just be seen as support and resistance in this order block. We bounced into it last week a couple times on the daily time frame, while also having the confluence of EMA 200 coinciding with it. So this was a decent long. It bounced a bit from there, rejected 69K, which is the previous all-time high region, as we all know. and then it retested again before moving upwards, and now it's just dropping and trying to find its footing after cooling off for quite a while. Some other demand areas on BTC currently, which you could like base some trade IDs off, would be these ones between 56K and 57K, and then you have like 55K here, which we could fill if we get like a very aggressive nuke. But that's yet to see. That's one way to approach your trading, like supply and demand. It's super simple. You just need to identify order blocks on higher time frames, and once price comes there, you need to execute. I feel like for me personally, I usually like using them on the daily time frame as they work best, and then I go lower and lower depending on the type of trade I'm taking. For example, here on the daily, we have a big one on in the 53K area, which is also something you want to look out for if we were to like retrace deeper pullback, have a deeper pullback in general. Another type of setup I like to trade, one which I've taken on Bonk today, is reclaim, this daily reclaim pattern, which Bonk just did here. Like we had this, we have previous all-time high, the previous all-time high body, on top of there being an order block here. And as you can see, Bonk deviated below. It chopped here for a bit, and now it reclaimed on the daily and it retested. And now, ideally, if the market's bullish and BTC holds and doesn't pull back too deep, you want to see Bonk move upwards from here on out and flip the trend completely. 28 is a big resistance on the daily, as you can see here. Like this whole area, actually, if you look at it. And once it flips that, it should be clear skies to take out all the air that it's made here, because there's not too much resistance left once 28 gets flipped. Like this is just air, and it should just full send above it, like that. So that's another type of setup I like to take, especially on higher time frames, like this daily deviation on top of a reclaim. These usually pay out quite well if conditions are favorable. They're longer time frame setups, so they're not really useful if you're scalping, because you'll probably have it too tight of a stop and you'll get stopped out before the setup actually plays out. But that's another way of approaching stuff. Now, if we're gonna look at some other charts, I'll just pick a random one. I guess WIF could be a good one for future prospective buys. Like here, actually, the daily one on WIF. We've made this demand zone here after rallying upwards and upwards, and it retested it, and it immediately gave you 100% bounce. Um, and you didn't have to do too much, right? I would assume that now that WIF has flipped this, you want to see this support area hold for WIF. And this could be your next area of interest if we ever decide to get a deeper pullback. A lot of this trading strategy is a waiting game and not entering when conditions aren't favorable. But once these deeper limits hit, more often than not, they pay quite well when doing so. An important thing to note when marking out this demand and supply zones is that with a demand zone, you want to use the low of the base and the highest body candle of the the bullish candle, so to speak. So in this case, you would mark it like toward to here, because that's your order block. And if you were to target a supply zone, you would use the lowest body candle. Like I guess on Sol we had one on the 3 daily when we looked there earlier. Like on Sol, you would want to mark it like this with the low wick of the body candle instead of the high. And you could start DCAing from there on out, which is quite, it can be quite far DCA range to like 5 to 10%. Um, but usually they give like a nice rejection. I prefer to just go off body candles instead of taking the wicks because some of the wicks get super crazy, especially in crypto. Um, but that's something I just wanted to give you guys as well, just so you know. You need to keep account for the body candles. And that's basically it. That's my trading strategy. Um, on the H4, I usually just like to use these daily supply zones as confluences. And once a big level gets flipped and I see momentum gets bullish, I just enter on a support retest. Fed had a really nice range, which you could have traded. Um, in terms of range trading, this was probably a blessing for a lot of people. Like if you see here on Fed, um, this support area where it's consolidating around previous all-time high, because it's like almost in price discovery again here, um, was such a blessing to trade because the every time it tapped the high almost, it rejected and it bounced back to the low. And now it seems to be doing the same again here. Like, let me redraw this range actually. And this is the range now from $3 to 236. It's broken the diagonal though. If you look here, if you zoom out a bit. So ideally, if it retests 270-ish, here again, I don't want to see it fall back below this demand zone because that wouldn't be so good. Like you could take a trade base of this small demand pocket here, and hopefully it bounces and gives some nice reaction. And if it doesn't, you can cut it. A lot of the time, if a demand zone is good or supply zone is good, the reaction has to be very aggressive. That's how you want to determine if you're right in your trade ID, right? If it taps the demand zone only ever so slightly and it immediately bounces away 3 to 4 5%, you know, like okay, there's lots of demand here. So if it comes to retest this again, it will probably give another bounce, which will be a bit weaker, of course, because it's gonna test it again. So that's also something to keep in mind in terms of supply and demand. How strong is the move or the gap it makes once it taps that liquidity pocket? So yeah, that's pretty much it in terms of my trading strategy. I hope it's useful for some of you. Um, you can also incorporate the RSI in some of these things. IDs, but I personally don't use the RSI that much, so I don't have too much to say on that. I just use it whenever it gets above the 50 and to indicate continuation or not on the H4, on the daily or the 3 daily. So yeah, that's it. Thanks for watching and have a nice day.